Hey everyone, it's Brian. So we have a little side note today. Looking at where we are with the prices of Bitcoin and cryptocurrencies in general, I'm listening to some analysis of people that do trading and analysis, TNA, and a point that popped into my head while I'm listening to them, and I'm realizing, is that we're not in a bear market. We're in a period of consolidation. Right now, the overall trend, I can still feel that energy of upswing. I can still feel that upward cycle. Plus, on the technical side, the network itself, the adoption's continuing. The asset side, the adoption's continuing. Wall Street continues to do things. Regulation continues to gain definition. And on the network side, the usage grows, where we have potentially a nation state in El Salvador bringing adoption and usage to the Bitcoin network. And I thought a little deeper in how this latest rise, going above the previous all-time high of 20,000 and going up to 30,000, 40,000, 50,000, eventually touching into the 60s. The surge in energy, the critical mass this time around was larger than what we had in 2017, which was larger than what we had in 2013, which was larger than what we had in 2010. So to say that there would be a pullback and if we look at the growth of the asset and the amount of new eyeballs, new people in this space, we shouldn't be surprised that the upswing was as large as it was. It could be the case that the next time around, does this mean if there's a large upswing, the added interest of the new people, all the people that threw in the towel when it pulled back from its previous all-time highs, they'll jump back in? Plus new people, plus the people that are getting it, that are learning about this technology, that are learning about this network, they'll jump in. Does that mean we'll see a massive swing up to 100,000 and another pullback to 50? Then a swing up to 200,000 and a pullback to 100,000? And just growing exponentially where each new low is higher than the previous high? It's quite possible. It's quite possible. I think this cycle has a unique element to it in the pullback, in that the amount of FUD going around, negative news. You had what was happening with Chinese miners and the amount of mining capacity going offline as miners relocate. The amount of selling by institutions new to the game, by the institutions that bought in at below 20,000, at 20,000, above 20,000. A lot of retail investors. We're at a point now that 30% higher than the previous all-time high, and that is the new current low. I'd say we've made quite a gain in the price markets as far as increases. Even if it only increased by 33%, actually, there would be 50%. A 50% increase in the price of the asset, that's still a considerable increase. The buffers are the holders and the stackers. That's always been the case, but that became very apparent to me. The holders and the stackers, or to use more proper nomenclature, the hodlers and the stackers, the people that understand the potential of Bitcoin, the network, that understand the value in holding the asset, that understands how these things reflect on the price. These are the people that when the prices go down, these pools continue to buy Bitcoin. You'll have institutions, you'll have whales, you'll have retail investors on your PayPals and your Robinhoods and people inside of their apps, their Cash apps, their Coinbases, buying and selling. But you also have a growing pool of people who understand this unique opportunity, this window of time that will never, ever present itself again in this way, in this form. And every time the price pulls back, gives these people who puts in $5, $10, $100 at a time a chance to acquire more of this amazing asset at a price that's more affordable, more sats per dollar. And as this grows, the floors will continue to grow. How this plays out as far as price, I don't know. I don't know. But how it plays out as far as the fundamentals, I think I just laid that out. This is Brian, and these are the side notes.